Right, great. Welcome everyone for this week. Okay, not only start of the week, but it's also the start of the month. So time really flies, right? Still thinking back, when we first have like the entire MCO, the lockdown, that was last year in 2020, and so fast. We thought it was 2021, it was a new year, and we are kind of like one quarter gone. Okay, so I hope you guys have been working towards your target, your milestone for the year. Okay, and it's on track to achieving it. Okay, yeah. So for this week over here, I thought today for what we're gonna do is, because since it's the start of the month, what I'll do is I'll quickly also update you on some of the performance that I have on my own personal trading and investing journey. Okay, of course over here the objective is not to have like compare the results. Okay, because at the end of the day, every one of us has very different profile, different risk tolerance, and of course different account size, right? So it's not really meant to do for any like who's better, who's performing better, but more towards giving you that idea that whatever I'm sharing on the regular basis over here, they are all practical trades, practical investments that I personally take and execute in my portfolio as well. Okay, so I thought that was important to keep you guys updated, especially for those of you who have been following us some time. I thought every start of the month we just do something like that to keep you guys updated on the performance. Okay, so for those of you who are very new to this, maybe you stumbled across a session like that, or let's say it's the very first time your friend actually introduced you to join in. Okay, like to gladly welcome you guys. Okay, and very quickly over here, I'll just spend a couple of minutes to really walk through the beginning part, and then we'll dive straight into this week's market analysis. Okay, quick introduction about myself. Of course, those of you who've been following me know that I started trading back in 2012. And since 2015 onwards, I've been very active trading, sharing my journey, my experience, what I know about market with the public. And of course, mainly in Southeast Asia, countries and cities including like Singapore, Malaysia, Thailand, Vietnam, Philippines. Okay, so these are some of the events that I did before, of course, the lockdown. Okay, and over here are just some of the recent results, right? So of course, you can see this is 2019 on the FX side, which is already a bit outdated, right? Because we are now already in 2021, and we are almost halfway there already. Okay, so this is 2019. Pretty easy year for me in terms of the FX side on 2019, right? Pretty solid year. This was last year's result, 2020. Okay, just want to give you an overview for the past couple of years. Okay, so what I want to highlight, of course, is in the entire journey of trading and investing, there will be losing months, right? So you can see 2020, in fact, there are 3 months that were down. You can see on this chart here, January, February, and May, right? But overall, last year was quite challenging, honestly. But yet, we're still able to capitalize on it and end off the year with about 8.5% on the FX side, right? This is 2021. Okay, so far for the year, we have been having pretty much a solid year so far, right? For the first 4 months, okay, and in fact, April was pretty solid. Okay, you can see the performance is actually about 1.67% for the month. Okay, and these are just based on FX itself. Okay, so again, you can see some months are better off. March was only 0.5. Okay, but that's how the market works, right? Okay, so we don't force anything, but we just basically trade off whatever opportunities that's presented in the financial market. Okay, so I've also been quite active in the US stock market. Okay, so this is, you can see, 2020 result. Last year, we actually end off the year with about close to 37% return. For the year in 2021, which is year to date, it was only about 4.11. But to me, that's pretty okay because I always manage on the risk side, okay, the volatility of my portfolio. So to me, as long as consistently year on year, I'm able to get about 15 to 20%, I'm pretty okay, right? Anything on top of that, I would call it more like a year-end bonus. Okay, so this is a little bit about it. So I wanted to do this, to really show you that whatever we share, okay, they are all practical stuff. They're not really just theory, that's taken out from books and stuff. Okay, so for those of you who are perhaps pretty new, have yet to connect with me on social media, if you'd like to, you can also connect with me on Facebook, on Instagram. Okay, pretty active on those platforms as well. And of course over here on YouTube, right? So if you'd like to reach out to me, any social media platforms that you are familiar with, that you're convenient, okay, you are able to do that. Great. So today's objective, we kind of keep it pretty straightforward, pretty simple, but at the same time, I want to emphasize on providing you guys as much value as I can. Okay, so first off, at the first portion, we're going to share with you my weekly watch list. Whatever trading opportunities that I'm personally monitoring, I'll be sharing with you first portion of today's live session over here. And after that, the remaining time, we'll just basically open up for Q&A. Okay, so this is where you have the platform, you have the chance for you to ask and clarify any questions that you would like to related to trading or investing. Or let's say if you have any particular instrument, asset, or FX pairs that you'd like me to share an opinion, okay, you'll be able to do that as well. Okay, so simply just type it into the chat box. I'll be able to monitor your questions. Okay, and from there, okay, we'll just proceed with that. Okay, so let's jump straight to the chart for today. Okay, now first up over here, I'll touch on two currency pairs immediately first. Okay, these are actually trades from last Friday. Okay, so we do have our mastermind group as well, where we do it on a daily basis, but over here, of course, we do on a week to week, right? So this one here was actually on the last Friday. Of course, I personally have gotten out at break even, and we do see some kind of nice reaction over here. Okay, but anyway, let me clean up a little bit on this. Okay, I think right now, the opportunity for the week still stands, right? If I were to bring in a little bit of drawing over here, okay, this opportunity still stands. I'm personally still monitoring it, even though I've exited that trade on Friday with break even. Okay, I think nothing has changed structurally. We are still expecting the probability to break to the upside. Okay, so on the 4-hour time frame, for those of you who are wondering, this is New Zealand franc, okay, Kiwi franc. So on the 4-hour time frame, this is pretty obvious. Okay, so what you can see is there's a mini push impulse, right? We call that impulse a very strong momentum to the upside, and after that we start to see market forms a correction. Okay, so we have been really eyeing this pair for some time, okay, in fact close to 2 weeks, and right now it seems like it's more or less completed, and I strongly believe that there is that potential, that possibility this week we'll see this rally up, right, back towards 6765. Okay, essentially that's where you can put the target. Okay, but of course over here, it does not mean that immediately right now you log into your account and then you start trading, right? I always say analysis is one part, the execution part of trading is another thing, right? You need to have your proper plan, proper strategy to execute and manage your trade accordingly. Okay, so take note of that. Over here, this is what I'm monitoring, what I'm focusing. Okay, Kiwi franc to upside. Okay, so keep an eye on this. I think within the week, there's a very good chance this pair will start kick off. Okay, not 100% certain. There's no such thing as 100% sure guarantee. But I think the probability to the upside is fairly high. Okay, so definitely have this pair in your watch list. Okay, Kiwi franc, and for those of you who are keen to have kind of like a target, okay, you can look up for 6765. The other pair here is Aussie Kiwi. Okay, again, this one here we actually took it. Just take this away, right? We took it on Friday as well. Okay, and you can see pretty similar setup, right? We have this move coming down very slow, and from here we have this push up and then a very slow move. So we call this impulse correction. Okay, every time you see a combination like that, we expect price to go back up. So we actually had a trade executed here on Friday, but I think the opportunity is still there. Okay, so what you can then now look out for this week, okay, is that if let's say here forms a mini flat, okay, mini correction that looks something like that, that would be a potential trade to take it to the upside as well. Okay, so you can see the room to the upside is definitely there. Okay, so you definitely want to keep an eye on Aussie Kiwi as well for the week, because there's a good chance this can hit higher. Okay, where can you look out for your target? At the previous high here, which is around 1.0945. Okay, so Aussie New Zealand is another pair that you might want to add it into your watch list as well, because this week here there's a good chance that this can continue the upside. Okay, so this is right. So New Zealand franc, Aussie Kiwi, these are the two pairs you want to definitely keep an eye on. Okay, on top of that, there are some major pairs that I'm personally looking out for as well. Okay, if you take a look on the right hand side of the screen, we have Euro Dollar, New Zealand Dollar. But of course, if you're trading FX, you also need to have a rough idea of what are some of the risk event that's happening this week. Okay, this is the very first week of the month, and usually at the first week of the month, we do have non-farm payroll, right? Other than NFP, of course, you have your labor data in that same time. Okay, so usually this is what's going to happen in the market related to US dollar, is that when there's such an important data that's about to release at the end of the week, usually building up to it, the major pairs dollar related is just going to be quiet. Okay, why? Because traders are simply sitting at the sidelines waiting for the news to release, for them to make a more informed decision to whether to buy or to sell. Okay, so usually before that, the market is going to be just sideways. Okay, so if you take a look at Euro Dollar and New Zealand Dollar, just bear that in mind that you might see, for the almost the entire week up to Friday, the market is likely about to correct. Okay, so you definitely need quite a bit of patience on that. Okay, so Euro Dollar over here, I have it in my watch list this week simply because I did see right now. Okay, in fact, you guys should see it as well. From this high, price start to make a low, and that is an impulse push, right? It's a very strong move to the downside. Okay, it take quite a bit of relatively short amount of time, but it moved quite a lot in terms of magnitude of price. And usually, what will happen is that we might see at least a minimum 3 wave, something like that. Okay, so personally, I'm interested to take the next move down. Okay, so this next move down, of course, it can come somewhere around here. That's about it, and then start to go back up. Or this down move here can come all the way back towards this low. So of course, we never know until we have more information. But the probability and the room to the downside is rather high. Okay, so that's where I want to start to focus on Euro Dollar. Okay. However, you do not want to sell it now, okay? Because after you see an impulse, I always share with traders, when you see an impulse push, don't trade it. Give it time, okay? Let it form that correction, then you have that good probability to the downside, okay? So what you need to wait for is basically wait for this setup, right? This pattern here, we call it the flag, impulse, and then after that a correction, then the next move. Right, so for this correction to develop, it might take today, tomorrow, Wednesday, and Thursday, building up to NFP, and then maybe NFP can be the catalyst to push price down. Okay, so have that in mind. Let's see how it goes. Okay, so Euro Dollar, can have it in your watch list as well, right? Very similar to it is actually Kiwi Dollar. Okay, so you do see this as well, right? Have this small little impulse push here, and of course right now if it's developing a flag, a correction, that's ideal for the trade to the downside. Okay. Now on top of that, you can see I have these two lines over here. Okay, this parent here is what we call a crawl, right? Or you can call it a wedge, a diagonal. Basically, that's a reversal pattern. Alright, so on New Zealand Dollar, what you see is that we have this previous high, price broke it, and the pattern that it broke it was actually an impulse followed by a crawl, which is a diagonal. And usually that indicates high chance of a reversal. Okay. So the reversal seems to have started with our very first push downside. So this week here, we'll look for that correction to form, and we'll take this trade down back towards 6950. Okay. So same thing as Euro Dollar, because we have the USD inside here. Just bear in mind that we have NFP. You need to be a little bit patient because it might just go sideways for the entire week, building up to Friday. Okay. So have this in your watch list as well. New Zealand dollar, I think the probability to the downside is definitely there. Okay, in terms of target here is 6950. Okay, now euro dollar, I forgot to share with you a potential target you can look out for. If you're very conservative, okay, then just look up for this area here around 1.1940. That's a very conservative target, but you know, if you're able to short it somewhere at the top, take profit at 1.1940, I think it's still not too bad, right? The other level you can keep an eye on is the previous low here. That will be around 1.1705. Okay, so definitely the downside is there, right? The room to the downside is there. Another pair that I'm keeping a close watch for this week is Euro Yen. Okay, so if you take a look at the chart on the daily scale, okay, this pattern here, I always emphasize and say that while this is going up, right, you do realize that the downside has much more room for price to actually move when it starts to go. Okay, so instead of like trying to catch that bit of top, you know, and it comes out a bit, goes up a bit, instead of trying to catch, you know, the buy trade, which might not have a lot of room to the upside already, I would rather focus on a reversal trade, or I would say a sell trade where I have a lot of room that I can capitalize on. Okay, so Euro Yen here, you definitely want to keep an eye on this. Okay, this can be a potential trade of the year. Okay, some of you who have been following since the start of the year, you know that we talk about dollar yen being one of the trade of the year, and then that trade is done, right? So we are looking out for another one right now. Okay, Euro Yen here might be a solid one, okay, for what we call trade of the year, which means that this move down can be so big that that profits would be solid. Okay, so keep an eye on Euro Yen. I think right now what you need is, you know, if you see any potential sell setup according to your strategy, according to your execution method, okay, you can actually look out for an entry to sell. Okay, for me, of course, right now there might not be a setup. Okay, maybe the closest one that I can see is that if this forms into what we call a crawl or a diagonal, then yep, this is a setup, right? Because we have this impulse and then we have a crawl. This is a pattern that we can take to the downside. That's the closest I see for now. Okay, but this very moment, okay, you are trading, let's say, a double top. Maybe you're looking at lower time frame, like 1 hour time frame. You can see this as a potential double top. So maybe you can trade the breakout of this neckline. That is possible as well. Okay, maybe some of you are harmonic pattern. You know, trade. This would probably be more of like a butterfly or maybe a godly, deep godly pattern. Sell trade, that's possible as well. Okay, there are just so many ways to execute a trade, right? And there's no one ideal best method. Okay, so that's where I say over here when we are doing sharing on a weekly basis like that, I want to share with you the direction that I'm focusing on, the opportunity that's on the table. But in terms of like how to enter, where to enter, there are just so many ways. Okay, so there's no point to kind of emphasize which one is better. Whatever that works for you, I think that works. Okay, so Euro Yen definitely downside. Keep an eye on that. Okay, Euro Pound here, I'm also looking at it. This one is more on the upside. Okay, let me show you the daily chart. Okay, you can see here, right? Very obvious. This is where that previous low was. That impulse push to the upside was very clear, right? Very fast, very fast push. And then after that, what happened? We have this 1, 2, 3, right? Very big corrective. Okay. So from here, it seems like this can be the bottom that has formed, and if this takes off, this can go back up to its high. Okay. Let's see how it goes, but I think right now not the clearest setup for the week, okay, because you can see back to the 4-hour time frame, okay, you can see that this can still come back down first to form this correction. Okay, so I think, you know, right now might not have sufficient information. You need to be a little bit patient. If this starts to just break off this high, then likely this will start to go, okay, where you want to then focus on buy side. Okay, however, there's this possibility this can actually develop into a crawl. Okay, something like that over here that you see. And if that happens, then this can come down first and then only eventually start to push back up. Right? So you need to be a little bit patient on that. Very hard to say what's gonna do for the week. Okay, we need to see by Wednesday, by Thursday, how price develop. Okay, then I have sufficient data to actually share a little bit more. But for now, I'm having this in my watch list is because if this starts to go, okay, the upside is huge, right? It's around close to 9495. Okay, the upside is really there. Okay, so I'm personally keeping a very close watch on Euro Pound as well. Okay, another pair here is on Euro New Zealand for the week. Okay, I think this is very straightforward. You see this impulse, you see this sideways correction, you expect one more push to the downside. Okay, so same thing over here. You need to have your own strategy to kind of like guide you in terms of how to execute those trades. Okay, in terms of Elliott Wave labeling, something like that. Okay, if I were to draw in some lines, okay, that's how it looks like, right? Clean this up a little bit. Okay, something like that. Right, so Euro New Zealand, focus on the downside. Okay, the target here. Okay, let me add in a little bit of FIB. Okay, there are two targets here, of course, you can look for. First one, the conservative, is about 6520. Okay, that will be a very conservative target. And if let's say you want to go for target 2, then look out for 6320. Okay, so Euro, Kiwi, also you can potentially keep an eye on it. I think this week, if this goes, you have a solid trade to the downside as well. Yeah, very similar to it, of course, is Pound New Zealand. Okay, if you look at the daily chart, same thing over here. You can see this is very corrective in nature. So when this starts to go, it has a high chance coming back to this low at 855. Okay, so on the 4-hour chart, okay, right now I think there are two ways you can take a look at Pound New Zealand. One is this is gonna form a bigger corrective pattern all the way back to this high. Then if that happened, then you have a solid trade to the downside. Okay, if that happened, then naturally this week you just wait all of it. Okay, just wait for it to develop. There's another possibility is this is the small correction and this starts to take off. Right? For me, I'm a little bit more of a conservative side, so I would suggest that if you're someone who's looking for a bit more confirmation, just be patient. Okay, wait for this to develop. Somewhere around here, then you take the trade down. Okay, so drop you that level 1.9500, right? Keep an eye on that. The idea is that if price were to come back up towards 1.9500, you want to keep an eye on sell opportunity. Okay, the downside here is 1.8525. Okay, so that's the setup and the opportunities right now. Yeah, so again, you do not need to have a lot on the watch list to kind of like keep an eye on, right? Because we always say you want to focus on quality ones instead of like looking at a lot. Okay, you look at a lot of pairs and you lose your focus. It defeats the whole purpose. Okay, so hope that helps. Okay, for those of you who are looking at commodities like gold and silver, I have been sharing that I'm very bullish on the commodities from a macro, from a fundamental point of view, because inflation is definitely coming. Okay, in the next 6 months to 1 year, okay, inflation is gonna hit it, and this time around it might be quite significant. Okay, simply because of how the Fed has been very aggressive in printing money, and of course the Fed has also made its stance that it will allow short-term inflation to overrun a little bit so that it can pull up the average. So inflation is going to overheat a little bit, definitely. Okay, and when that happens, there will be a devaluation of the dollar, and that's where money will start to flow into the commodities market as one of the other assets, okay, to hedge against inflation. So I'm very bullish on precious metal, I'm very bullish on like copper, aluminium, palladium, right? Precious metal, basically, I'm pretty bullish, okay? So gold and silver is one of the common ones. So if you're taking a look at them, then the direction is definitely outside, right? Okay. Over here we have been sharing for gold. If you're looking at it, the target eventually you aim for is around 2074. That is a big I would say target long term. Within the next 6 months to a year, right? Potentially that can hit. If you're looking at silver, then the level you want to keep an eye on is $30. Okay, same thing. Within the next 6 months to a year, likely it can hit the target over there. Okay, so this is a quick one on gold and silver. Okay. Other than that, some of the crypto side on Bitcoin and ETH. Over here, I would suggest you can see on Bitcoin. This is the futures chart, right? 4-hour time frame. You see this is more like an impulse down and then an impulse up, right? So every time we see a V shape, you don't trade. Okay, what you want to do is be patient, wait for a flag, for a correction, and then you take this trade up, right? But for now, I would suggest stay out of it first, because this can easily come back down, then go back up, and then come back down, and then only eventually go. Okay, so it can form this big correction here. Do not want to get trapped within the zone, right? So just be patient on Bitcoin. Okay, on ETH, of course, you can see Ethereum actually break all-time high. And this move here is basically an impulse push, right? So again, same thing. Be patient. If you want to buy it, wait for that correction to form. Then you take that trade up. Okay? So that's the view on crypto. I started to be a little bit more active on crypto market as well, right? More like some of the major ones like Bitcoin, Ethereum, Link, right? Those are the ones that I'm looking. Those very small alternative coins, personally I don't touch them. Okay, it might have liquidity issue as well, right? Which means that I can't get out if I want to, or even I can't find the next buyer. So I would suggest, if you're looking at those smaller altcoins, just factor that in, right? Factor the liquidity environment in. Okay, I hope that helps. Great. Okay, so these are some of the things that I'm personally looking out for this week. Okay, again, this week is a little bit, I would say, a little bit more. Usually we don't have so many pairs that we are looking out for. But I want you to know that depending on how the market develops, from today onwards, okay, things might change, right? So what I can share with you, of course, is based on what I'm seeing right now. Okay, because by Tuesday, by Wednesday, if the market develops into a different thing, we of course need to update our analysis. Okay, yeah. So good. Hope it's clear so far, right? That's all I have to share on my side in terms of the opportunity for the week. Okay, now let's say if you guys have any questions right now, you'll be able to ask any questions, right? Just type it into the chat box. I'll be then able to see your questions, or if you have any particular instrument or asset that you'd like for me to share my analysis, my opinion on, do type it into the chat box there as well. Right? I'll give you guys some time to do that, and see if you guys have any questions. Hey, great. So I see Adrian asking about pound dollar and Aussie dollar. Okay, direction that you're asking is more to the upside, right? Okay, so let's take a look at pound dollar and Aussie dollar. Okay. Great. Okay, so pound dollar first. Okay, I think pound dollar here, if you ask me, right, I would say more or less neutral for me. Okay, but if you say short term, okay, I think pound dollar has a good chance to retest this high here. Okay, I think pound dollar has a good chance to retest 1.4005. Okay, why I say that is because you do see this pattern, right? So you have this mini impulse push, this 3-wave correction, and then of course you see this mini V shape forming here right now. So there's a good chance this will come back up towards 1.4005. Okay, but if let's say you're looking to buy it, okay, I would say be very careful once it reaches 1.4005, because then you can see how many times it has come up and rejected. Okay, so if this comes back up here, you want to be very careful and keep an eye on how price is developing when it reaches 1.4, because there's also a good chance this will then come back down. Okay, so that's my view on pound dollar. Okay, however, if I bring you on the daily time frame, right, I would suggest that long term wise, you want to instead look for the downside. Okay, obviously there's this small chance this can come back up, right, forming this double top, then only it drop. But again, you just compare the room that price can travel to the upside versus the downside, right? So this is always where I would focus on the direction where price has much more room to actually move. Okay, so for me right now, pound is a little bit more on the neutral side, but on the short term, there's a good chance it will come back to 1.4005. Okay, so that's on pound. In terms of Australia, okay, you see my analysis, I think you know what I mean, or what I'm looking out for. There's a good chance this will also go back up towards 7850, right? But you do realize that I'm not interested in the buy, right? Again, this is the room to the upside. It's not something that excites me. But if I show you on the daily, this is where there's a potential head and shoulder pattern as well. And if this drop big, right? And if this level clears off, this can come down even bigger. Okay, so Aussie dollar, I would say long term you want to focus on the downside, but of course on the shorter term, within maybe this week or so, this can develop back up towards 7850. Okay, I would say if you're more of a swing trade, right, like maybe mid to long term trader, you might want to just skip this buy trade and wait for it to come out here, and then you look for a sell. Right? But if you're someone who is shorter term trader, then of course this opportunity here fits into your profile, profit from as well, right? So that's my view on it. Okay, something that I will not put too much emphasis on for this week, but okay, if you're short term, definitely there's still chance to make money from it. One more thing, of course, is both pound dollar and Aussie dollar there's a dollar currency inside it. We have NFP this Friday, so just expect a little bit muted, right? So from now until Friday, these two pairs might not move a lot. But of course, you can see pound is moving, right? It might be because of the catalyst from BOE or from pound itself, okay? Not so much from the dollar, right? Because if you take a look at the dollar pairs, they are not really moving a lot. Okay, so hope that helps. Hope that's clear as well, right? Chris, swing trade question. Okay. So left the trade open overnight. The next day, the trade had stopped out due to spread. Oh, okay, I get what you mean. Okay, so Chris here asks, would like to get your advice on this to know if this is a common issue with swing trading. Chris, I'm not sure which pair you're involved, you're trading. Okay, but likely looking at how your spread from 3 pips changed to 40 pips over the weekend. My best guess is related to New Zealand, right? Okay. My best guess is related to New Zealand, because most of the time, over the weekend, New Zealand pairs, the spread is gonna be widened, like as high as maybe as you say 40 pips. Okay. Now it's not common, yet it's not uncommon, right? But it happens. Okay, I've experienced that before. And this is all part and parcel of trading. Okay, as a retailer, we don't have like the best liquidity out there. Okay, so I would say you want to factor that in, especially if you're trading less liquid pair. Like New Zealand is definitely less liquid among the major currencies. Okay. So yeah, right, New Zealand CAD. So New Zealand is definitely the less liquid currency out there. My suggestion to you is keep an eye on it. Does it happen frequently? Okay. Now if it's happened over the weekend, it's pretty common, right? Because New Zealand is illiquid. So what then you need to do is perhaps you need to factor in like when you're shifting your stops, okay, on Friday, understanding that when the market closes on the weekend, the spread is going to be widened. Okay, so have that in mind. But if let's say every week, okay, it's when the weekend comes, the spread, suddenly push it up to 40 pips. You want to check maybe with your broker side, okay? Because if it's happened a regular basis, then maybe your broker is not having a very good liquidity provider that's supporting that. Okay, it might not be the broker, doing something to try and trick you. It might be really the case where the broker's liquidity provider might not be able to support that kind of weekend spread. Okay, so if it's every week is a regular thing, okay, my suggestion is maybe you want to check back with the broker that you're using, right? But I'm personally experienced, before, okay, not every week, but yeah, sometimes it does. Okay, so that's the part. Okay, as a trader, okay, we always want to rectify the part where we try our best to see if the platforms, we try to choose the best platforms out there, right? But at the same time, you want to also start to figure out what are some of the methods that you can incorporate in and be a little bit adaptive to the environment. Okay, so a lot of times I hear traders put the finger to like point their finger, right? Blame the platform, blame the broker, and things like that. Yeah, right. One way is you try and find another platform that's better. But I think the other aspect that you want to take is also how you can factor this in as part of your trading plan, right? As part of management. Okay, and I feel that you do both, then that will be better, right? Make sure the platform is good. At the same time, factor that in because sometimes it does happen. Okay, so that's my view on it. Hope it helps. Okay, Jimmy asks, can we combine diagonal and correction with support and resistance? Okay, so with support and resistance, we can predict where the correction is going to stop and start impulse. My answer to that is yes. Okay, in fact, I would say there's no such thing as like the only one or the best method to do your analysis or trade. Okay, any method that works for you is the best, right? But at the same time, while you are combining stuff or putting things together, try not to overcomplicate the whole process. Okay, the worst thing you can do to your analysis and trading process is you start to add like multiple indicators to it. So you start to add like pivots, Fibonacci, moving average, RSI, MACD, Bollinger Band, and then you add like Ichimoku. That's not gonna help you, right? So I would say you want to have elements that's able to give you that confidence to trade, but at the same time, don't overcomplicate it. Okay, so if I bring you to, let's say, some example of like New Zealand dollar over here, right? Let's use some case study. Right? So you do realize that I use support and resistance. I won't call it support and resistance because I don't trade off those level. Okay, but you do see I reference to previous high and low, right? Okay, I reference to previous high and low. Now the idea here is a lot of times many traders would just say, oh, last time there's a reaction at this level, this becomes resistance, so immediately when next time it comes out here, I'll sell it, right? Now sometimes it works, like this one here is perfect, right? But sometimes it doesn't because it tends to just break it, maybe then after that instantly come back down, right? So I don't trade off support and resistance, but you do look at my chart and you can see that I reference to previous high and low, right? And that becomes area of focus, which means when price reaches that zone, pay attention to it. Then I usually ask myself, like, what is the pattern that's happening when price reaches that zone? Okay. So in this case, on New Zealand dollar, you can see while price comes up with this level, we see it as a correction, right? As a diagonal, as a crawl. So we know the pattern here is that high chance this will reverse, and of course, it's happening at that previous high. So you can call it the resistance zone as well. Okay, so that's like a double confirmation. Okay, you can incorporate that in. Some of you, maybe you might also add in, let's say, an RSI momentum indicator, right? Let me show you that. Okay, and let me extend this a bit, and you can say that, okay, on top of just support and resistance, if price reaches here and we are in an overbought condition and we have like RSI divergence, then we'll look for the sell. Okay, that's also fine, right? Because you're adding a layer of confirmation, but you're not overcomplicate stuff. Okay, you're not like adding too many things onto it, so that's fine. Okay, so to answer your questions, if you add in support and resistance, and if it helps you, right, giving you that confidence to execute your trade, that works. Okay, so yeah. Okay, folks ask, is it safe if I enter 3 different New Zealand pairs and having buy and sell trade? Okay, very good. Okay, good question over here. I'll talk about this principle here. Since you talk about it, we call it risk exposure. Okay, now a lot of times you hear the word risk management, right? Okay, where we always say, you hear this more than, many times, like never risk more than 1% per trade. Okay, that's like the basic level of risk management. Okay, so you go and calculate your lot size, your position sizing to ensure that if, let's say, the trade loses, you lose only 1% of your capital. Okay, but the principle of risk exposure is where, let's say today, you have like New Zealand dollar. Okay, you are looking to sell. Okay, and then let's say you have New Zealand CAD, you are also looking to sell. Then you have, let me use this, New Zealand franc. Okay, and Aussie New Zealand. Okay, that. Change this to buy, right? Since this week we are looking at that. Okay, so we use this week's case study, right? So if, let's say you are faced with this, so you realize 3 pairs here, 3 of them have New Zealand inside, okay? And of course, some of the pair we are selling, some of the pair we are buying. Okay, and this is the part where the principle of risk exposure come in. Okay, so as a trader, you want to then identify, okay, right now I have 3 setup, I have 3 opportunities on the table. If I take all of them, I'll be exposed in New Zealand multiple times. Okay, so the first thing is you need to be aware of it. Okay, and then the second step over here is you start to identify how many times are you selling the New Zealand, how many times are you buying the New Zealand. Okay, now if you take a look at this, okay, first up over here we have New Zealand dollar sell. Okay, so essentially you are selling NZD. Okay, and then you have New Zealand franc, you are buying this pair, so essentially you are buying the New Zealand. Okay, and then of course you have the Aussie Kiwi. If you're buying this, then you are actually selling the New Zealand pair. New Zealand currency. Okay, so from here you have 2 sell New Zealand, 1 buy New Zealand. Okay, so what we call over here, of course, is if you trade all of them, you are exposed to New Zealand sell 2 times, which means if you're involved in New Zealand dollar and Aussie Kiwi and somehow something positive happened and the New Zealand dollar shoot up, right, then you lose the New Zealand dollar and Aussie New Zealand roughly about the same time, right? Very high chance you lose them both, right? So then you realize that suddenly you're down by 2 trades, okay? You're down by 2% if, let's say, each trade you take 1%, okay? And this is the part where many traders are not aware, they do not take care of their exposure, and then suddenly they realize that, hey, how come I have like a string of losses? Okay? It might be because they are taking trades that are correlated to one another and they are not aware about it. Right? So over here, it's fine. Okay, because I do not want you to have the impression that, oh, then it's a bad thing to trade pairs that are related or same currency. It's fine as long as you are aware about it, you are able to manage it, okay, and you know what's the worst case scenario. Okay, some traders are perfectly fine with that. Okay, they can say that, oh, if I put in 1% per trade and then right now I have 2 New Zealand sell, and if I lose both, I'm fine with it, then by all means, right, go with it. But let's say today you're aware about it already and you realize that, okay, your risk tolerance might not be able to take it, then what I suggest is you can either filter off, maybe choose one of it, or you lower your lot size. Okay, you smaller your lot size so that overall your risk tolerance are still within check. Right? So hope that helps. But okay, because you see over here, right? We have New Zealand dollar this week. We are looking to sell. We have New Zealand franc. We are looking to buy, and of course, Aussie New Zealand. We are looking to buy, right? So it's something that for me myself, I also take into account risk exposure. Okay, so have that in mind, right? So I think it's a very good question. Okay, so this topic here on risk exposure, not a lot of people talk about it, but I think it's very important. If today you have multiple currencies in your portfolio that overlap one another, then it's good for you to have this. Yeah, great. Yeah, I hope that's clear. Cool. Great. Okay, so any more questions that you guys have? All good? Okay, not seeing any more questions then. Okay, cool. So really hope what we are doing here on a week-to-week basis helps. Okay, to provide you some insight, some ideas into trading. Okay, the main objective, of course, to really reach out to more people, let them know trading is not a get rich quick thing, right? It takes effort, it takes the commitment, it takes a certain process to eventually acquire that skill set. Okay, and my role here, my objective is to help you quicken that learning curve, right? Ideally by sharing with you some of the process that we do over here, and then of course with that Q&A, okay, hopefully it will be helping you guys to shorten your learning curve at the same time. Okay. Oh, I see a few questions coming in. Okay, great. We have Wong asking about Euro Australia, right? Let's take a look at Euro Australia. Okay. Now, first impression. Okay, when you open up a chart and you see something like that. Okay. When I mean something like that, it literally means up and down, right? We call this choppy. Okay. When you open a chart and your first impression when you look at the chart is like it's choppy. Okay. Immediately you want to, number one, immediately you know this is a correction. Number two, you want to start to zoom out. Okay, then you start to see things a little bit clearer. Okay, so that's a little tip for you guys. Okay, if you open a chart and immediately your first impression is, wow, this is very choppy. Okay, understand that this is in a corrective phase, therefore it's very choppy. And the second tip here is just zoom out. Okay, so you can either string your chart or you can just go to a higher time frame. Either works. Okay, and you realize that, okay, that's basically just a correction, right? Can see. Okay, so for me on Euro Australia, I wouldn't put too much emphasis on it this week. Okay, because what I see over here is likely this is just gonna consolidate another week or so. It can even be longer. But for me, I'm waiting for this to come back up towards 1.5690, right? That's where your previous high here is. Okay, and I want to see how price react at 1.5690. Ideally, I want this to go slow. Okay, something like that, and then it forms a flag. Perfect, I'll take that trade down. Okay, but for this to develop, you might need to give it 1 week or 2 weeks. This chart here is on the daily, right? So you need to give it time. So I would say this week here, if you want to trade it, is very, very difficult. Okay, you can see, right? There's no clear sense of direction, just basically up and down, up and down, up and down. Okay, so my suggestion is, if you can, just stay away of Euro Australia, don't touch it. Okay, but if you are a very short-term trader, then you might want to potentially maybe see if you can look to buy somewhere bottom for the short-term trade to the upside. For me, I won't take such trade like that, right? Because number one, the room to the upside is not there. To me, it's not attractive. Number two, we are in a correction, okay? When price is in a corrective phase, it's very difficult to trade, okay? Just play back a little bit, right? To illustrate that for you, just play back a little bit over here. And can you imagine, like, you see this goes up and then you decide to buy, and then what happened? Price comes down a little bit, okay? Then you panic, and it goes up again. You get happy a bit, and then it comes back down. Oh, you panic again, and then the next thing you do is you probably look to get out at break even, and then after that it starts to move. Then you say, "Wow, heng ah, lucky I never hold on to my buy." Then you start to see, oh, it's coming down. You start to sell it here, okay? And then what happens? Oh, a little bit of profit, a little bit of drawdown. You start to panic again, and then you try to get out at a small loss or break even. Basically, it's very difficult to trade. Okay, so every time you see a corrective move, my suggestion is always stay out of it. Okay, just give it time to finish off what it wants to do, and then you get a solid trade. Okay, so Euro Australia, that's my view. Yeah. Adrian here also asks, how do you manage your emotion during floating trade? Okay, very good question. Let me show you some example, right? Okay, bring this back up. Now this is one of the trade that I took on last Friday. Okay, it's a simple breakout trade where I just have a breakout order here. Price broke out of it, and then we are in that trade. Okay, so now let me share with you how to manage running trades. Okay, so the idea of why we look at impulse and correction, right? The way we analyze the market, why we are using Elliott Wave is because most of the time when we enter a trade, we want it to go off impulsive. Okay, now to show you that, okay, of course this is not like the ideal clearest setup, right? This is not the ideal one. Okay, but you can still see a little bit of here, right? On Friday we enter, right? Almost immediately the price shoot up with a big candle like that, right? That's what we call impulse. The momentum is there to push it up. Okay, so what you want to do as a trader is Elliott Wave analysis allow us to execute trade where we can capture this. Okay, not all the time. There's no such thing as 100%, but most of the time. Okay, and that allows us to quickly, from our initial stop loss here, quickly shift it to break even. Okay, now when you do that, you instantly remove a lot of emotion and psychology out of this trade, right? Because why? The worst case scenario for this is you're just gonna break even. You're gonna not win, but you're not gonna lose. That's the worst case scenario, okay? And emotionally, you feel good about it, okay? That's happens to all trader, right? We are all humans, okay? So we definitely feel happier if there's no risk involved, okay? So that's the part number one, okay? That's how we manage that aspect, okay? We try to time our execution such that when we enter a trade, we can quickly shift and mitigate our risk so that we can just let it run as far as it goes. Right? So that's how it happens. That's the first way. But of course, not all trades are gonna be perfect, right? So what about losing trade? Okay, and that's the part where we have our stop loss in place, right? Let me bring back down that stop loss. Okay, that's where we have the stop loss in place. Okay. So we know that if, let's say, we enter this trade and if this doesn't go and it starts to come back down, we know what's the worst case scenario, which is hit our stop loss, and then we know exactly how much we are risking, how much we are losing. So in that perspective, of course, it doesn't feel nice to lose money, but you know your worst case situation. Okay. So if, let's say, price come down and we are in a drawdown, there's nothing much for you to worry, right? You are prepared for the worst case scenario, and we are hoping for the best case here. So I would say, if you're trying to or you're having certain challenge in managing your emotions when the trade is running, perhaps it's a sign that you're risking too much on that trade. Okay, where you're getting a little bit too anxious, too worried about it. Maybe that's a sign that you are risking too much on the trade. Or if, let's say, going back to just now that one on Euro Australia, right? Or if you're trading within a phase of correction that looks like that, okay, and like you buy and sell in the middle, obviously it's going to be very difficult for you to manage it too, because it can be like a few hours you're seeing profits, a few hours you're seeing loss, a few hours seeing profit, a few hours seeing loss. Okay, definitely it's not easy as well. Okay, so there are a few things you can take a look and see how you can work on it. Number one, is it your execution? Are you taking trades when it's in a corrective phase? If it is, the easy solution here is you need to time your execution better. Number two, are you emotionally affected because you are worried of the outcome? Okay, if it is, then maybe you're risking too much, right? Then you need to go and reassess like your position size, your lot size on that aspect. Okay, so this is how you can see, and try and see which one actually helps you a little bit on that. Okay, so hope that helps. All right, hope that helps. Okay, yeah. So again, these are all very good questions, right? Great that you guys are engaging and asking good questions. Okay, cool. Okay, so I hope this session has been helpful. Okay, if you really enjoy something like that on a week-to-week basis, all I really ask is to support this video, to help the algorithm of YouTube is simply like clicking the like button. YouTube will have certain algo to reach out this video to more people, or of course, if you benefit from it, share it out with your trading friends, your community out there, so that able to help me to reach out to more people like that as well. Okay, yeah. So yep, that's all for me over here today. Okay, really hope you guys benefit from it. And of course, I always like to remind traders to manage your risk. That's the most important thing in trading and investing. Yeah. So yeah, all the best for you guys this week. Okay. So for Thursday, we'll run it in Mandarin, similar structure. If you like to join us for the Mandarin session, it will be on Thursday, same timing, 9 p.m. If not, then I'll see you guys the following week, right? Next week on Monday. Hey, all the best and see you guys. Bye bye.